You don't have to be a financial wizard to predict future costs. There are three primary ways that this is done by regular old accountants: scatter plots, high-low method, and regression analysis. This short video will focus on the high-low method. The high-low method separates variable costs from total costs to determine fixed costs. It does not refer to a poker game. The first step is to divide changes in costs by changes in volume. So we take the cost at the high level of volume and subtract the cost from the low level of volume. It is the volume that determines high and low, not the costs. This calculation will give us variable costs per unit. So in a sample data set, notice the volume and costs for 6 months. The high level of volume is April at 50,000 miles. We also need the cost for this month which is 63,000. We would always use 63,000, by the way, as the high cost, even if there is a month that had a larger amount. Remember, it's the volume that determines high and low. The low level of volume is January at 20,000 miles. The cost associated with January is $30,000. So high cost minus low cost is 33,000. High volume minus low volume is 30,000. When we divide the two, we get a variable cost per unit of $1.10. Using our data table and the variable cost per unit, we can figure out our fixed costs. This can be done two ways, and both give us the same information. We can take the cost at the high volume and subtract the high volume times the variable cost to arrive at the fixed costs. Or we can take the cost at the low volume and subtract the low volume times the variable cost per unit to arrive at the fixed costs. Here you can see where I've done it both ways. High cost of 63,000 minus high volume of 50,000 times $1.10 equals $8,000 of fixed costs. You can see we get the same number when we use the low amounts. Since we know both variable cost per unit and fixed costs, we now can write the cost equation. In this case, it's y equals $1.10x plus 8,000. With this information, we can predict costs at various levels of volume within the relevant range. What would the total cost be at 45,000 miles, let's say? Well, you can see using the calculation that we would predict the cost to be $57,500.